Have you ever wondered why some people seem to keep more of their hard-earned money, while others struggle to get ahead no matter how much they make? What if the secret isn't just how much you earn, but what you actually keep? Welcome to From Book to Life. Today, we're diving deep into powerful, real-world tax strategies directly inspired by the lessons from Rich Dad, Poor Dad by Robert Kiyosaki tailored for small business owners, freelancers, and anyone ready to take control of their financial future. In this video, you'll learn how to turn complex tax laws into real savings, safeguard your assets, and build a stronger foundation for personal and financial growth. You want to work smarter, not harder? You're in the right place. Don't forget to like, comment, subscribe, and join this journey from book wisdom to real-life financial wins. When diving into the world of taxes, it's crucial to start with a clear understanding of the fundamentals that govern smart tax strategies. At the heart of effective tax management lies a few core principles that, when embraced fully, can transform what often feels like a daunting obligation into a powerful tool for financial growth and protection. One of the first and most important distinctions to grasp is that reducing your tax liability through legal means is fundamentally different from tax evasion, which is illegal and carries severe penalties. This distinction, just technical jargon. It's a mindset that empowers you to approach your finances with confidence and integrity. Knowledge, in this context, indeed becomes profit. When you understand the tax laws, credits, deductions, and opportunities available to you, you unlock the ability to make informed decisions that directly influence your bottom line. But it's not enough to simply be aware of these elements. Proactive planning stands as the cornerstone of any effective tax-saving strategy. Planning means anticipating your financial moves and their tax implications ahead of time, giving you the latitude to structure your income, investments, and expenses in ways that optimize your tax outcomes legally. Equally important is the often overlooked discipline of documentation. Keeping meticulous records is not just busy work or a bureaucratic hasslet. It's your shield in the face of audits and an essential component of ensuring full compliance with tax regulations. Each receipt, invoice, and bank statement you organize today becomes a piece of evidence that supports your financial narrative to the IRS, if ever questioned. This attention to detail builds a foundation of trust and transparency that can save you considerable stress and money. Understanding these core principles reminds us that taxes are not just a burden, but a recurring event that, when managed wisely, can become an opportunity for safeguarding and growing wealth. It's about embracing a long-term perspective rather than seeking quick fixes or shortcuts. As we consider these themes, it's clear that strategic tax planning requires discipline, foresight, and a commitment to ethical financial practices. These elements come together to frame a tax approach that is both sustainable and aligned with your broader financial goals. In many ways, these fundamentals shape more than just your tax return. They influence how you think about money and business. They challenge you to become an active participant in your financial journey instead of a passive taxpayer. With knowledge as your cornerstone, planning as your roadmap, and documentation as your armor, you set yourself up for not only compliance, but also significant financial advantage. This foundation will serve as our benchmark as we explore in more detail the specific strategies available for reducing taxes legally. Each tactic we examine builds on these principles, transforming abstract ideas into practical steps you can implement. The journey through tax optimization begins here, anchored firmly in these essential truths. Building on the foundational principles of smart tax management, it's essential to delve into the practical strategies that enable you to translate knowledge into tangible savings. One of the most accessible and impactful ways to reduce your tax liability is through maximizing your deductions. By understanding the major categories where the IRS allows meaningful reductions, you can methodically identify every legitimate expense that lowers your taxable income. This process feels less like hunting for loopholes and more like uncovering rightful credits for costs you already incurred to operate and grow your business. Among these categories, business expenses stand as the backbone of most deduction strategies. With the evolving tax landscape, especially since recent IRS updates in 2025, home office deductions have become increasingly relevant for millions of Americans who continue to work remotely or run businesses from their homes. However, the IRS has tightened some requirements, making it vital to understand precisely what qualifies as a deductible home office. This means your space must be regularly and exclusively used for business. And the deduction calculations require careful record-keeping of square footage and related costs. Beyond the home office itself, work-related equipment also plays a significant role in balancing your books. Whether it's a laptop, specialized tools, or even office furniture, these items are purchased to support your professional activities. They can often be written off or depreciated over time. These expenses may seem small in isolation, but add up considerably, especially for freelancers, consultants, and small business owners who depend heavily on technology and equipment to deliver their services. Internet and cell phone bills also deserve attention. In an increasingly connected world, these costs are essential for daily operations and client communications. Many taxpayers overlook or underestimate the deductions tied to these utilities, simply because they are ongoing monthly expenses that blur personal and business use. Yet, the IRS allows deductions proportional to the business-related use of these services, which means detailed logs or reasonable estimates can justify substantial write-offs. Professional development expenses are another strategic avenue for deductions not to be missed. In a rapidly changing job market where continuous learning often makes the difference between growth and stagnation, expenses like training courses, certifications, and relevant educational programs are typically deductible. They maintain or improve your skills in your current trade or business. This not only reduces taxable income, but also contributes directly to your career advancement, making it a powerful dual-purpose investment. By weaving these categories into your tax planning, you create a holistic deduction strategy anchored in real business realities. These expenses, home, office equipment, utilities, and education aren't just numbers on a tax form. They represent tangible aspects of your professional life. Recognizing and tracking them meticulously connects you back to the earlier principle. Documentation protects you. Proper documentation turns these everyday costs into strategic financial advantages, setting the stage for more sophisticated tax planning as we continue exploring. Continuing from our discussion on key deduction strategies, it's vital to recognize that for many business owners and self-employed professionals, vehicles are more than just transportation. They're integral tools of the trade. This makes vehicle-related expenses a significant arena where strategic tax planning can yield meaningful savings. Understanding each component of vehicle deductions and how the IRS approaches them helps you frame your spending not as a cost, but as an investment in your business operations. One of the most straightforward and popular methods for claiming vehicle deductions is through tracking business mileage. The IRS offers a standard mileage rate that simplifies this process, allowing you to deduct a fixed amount per mile driven for business purposes. This rate can change annually, reflecting fluctuations in costs, like gas and maintenance. So, staying updated with the latest figures is essential. Carefully maintaining mileage logs or using mobile apps to track travel distinguishes legitimate business trips from personal driving. Enforcing the crucial principle of accurate documentation. Apart from mileage, direct vehicle expenses such as maintenance and repairs are also deductible, provided they relate to business use. These can include oil changes, tire replacements, brake repairs, and other necessary upkeep that keeps your vehicle running smoothly and safely on the job. Documenting these expenses with receipts ensures your claims are supported, turning otherwise routine costs into valuable tax deductions. Fuel expenses, whether gasoline or electricity in the case of electric vehicles, represent another major category. The distinction between personal and business use remains critical here, and documentation such as fuel receipts and charging station invoices becomes indispensable. With the rise in electric vehicle adoption, the IRS has adapted to include deductions related to electric charging, reflecting changing technologies and sustainable business practices. Vehicle depreciation, perhaps the least intuitive but equally impactful deduction, allows you to gradually write off the cost of your vehicle over several years. The IRS provides specific schedules and limits for depreciating different types of vehicles used for business, including luxury vehicle caps and Section 179 expensing options for qualifying purchases, although it requires more detailed record keeping and sometimes professional consultation. Depreciation can significantly reduce your taxable income over time, especially for businesses heavily reliant on their vehicles. Taken together, these vehicle deductions compose a comprehensive toolkit for business owners to reclaim costs related to their essential transportation assets. They demonstrate how a seemingly routine aspect of running a business holds strategic potential when approached with the right knowledge, planning, and documentation. This approach reinforces the ongoing theme. Understanding and organizing your finances is not just about compliance, it's about transforming everyday expenses into smart, tax-savvy decisions. Building on the discussion around tangible business expenses like vehicles and equipment, it's important to shift our focus to another crucial dimension of tax optimization: education and professional development. In today's fast-paced and ever-evolving economy, investing in your skills isn't just a career booster. A strategic financial move that the IRS acknowledges through various deductions and credits. The commitment to continued learning doesn't just enhance your expertise. It can also be leveraged to reduce your tax burden when done thoughtfully and within the framework of existing tax rules. Starting with technical courses, these programs play a vital role for many professionals, especially those in fields requiring certifications, licenses, or up-to-date technological skills. Whether you're learning new software, enhancing your coding skills, or updating compliance knowledge, fees related to these courses can often be deducted if they maintain or improve your current professional abilities. The key is that these courses must be directly related to your business or trade, highlighting the interplay between knowledge acquisition and practical application. College tuition, while more commonly associated with individual education rather than business expenses, can also be relevant for entrepreneurs and freelancers who pursue degrees that align closely with their current professional activities. For example, a small business owner pursuing a degree that directly relates to their industry or managerial duties may qualify for deductions or education credits like the Lifetime Learning Credit. These tax benefits encourage ongoing academic growth while partially offsetting the financial burden of higher education. Graduate programs deepen this conversation even further. Advanced degrees often come with a hefty price tag, but represent a substantial investment in your professional trajectory. When these programs relate closely to your business or profession, they may qualify as deductible expenses or be offset by educational tax credits. This creates a powerful incentive to pursue higher education strategically, blending career advancement with smart financial planning that considers tax implications up front. Finally, the cost of professional books and other educational materials is frequently overlooked but just as critical, whether it's textbooks, industry journals, or reference guides. These resources support your learning and development in ways that directly benefit your business. The IRS generally allows these expenses as deductible if they are necessary for maintaining or improving your skills. This encourages a holistic view of education, one that extends beyond formal courses to include the broader ecosystem of knowledge acquisition. Together, these educational expenses underscore a profound truth. Investing in yourself is a form of business investment. By carefully documenting these costs and understanding the qualifying criteria, you not only enhance your professional edge, but also harness an important tax strategy. When combined with the foundational principles and deduction tactics we've discussed earlier, education and development expenses position you to build both your skills and your financial strength in tandem. having explored the many avenues for minimizing tax burdens through expenses and education. We now turn to a strategic structural choice that can significantly influence your financial outcomes: forming an LLC, or Limited Liability Company. Establishing an LLC is more than just a legal formality. It's a proactive decision that aligns with both tax efficiency and personal protection. In the complex environment of U.S. tax law, choosing the right business entity is a foundational move that can dictate not only how much you pay, but also how you safeguard your personal assets and build credibility in your field. One of the primary advantages of an LLC lies in its potential to lower your overall tax liability. Unlike a sole proprietorship or general partnership, an LLC offers flexibility in how income is reported and taxed. Many LLC owners benefit from pass-through taxation, where profits and losses flow directly to personal tax returns, avoiding the double taxation often faced by corporations. This characteristic alone can translate into significant savings if navigated with care and in consultation with a tax professional. LLCs also expand the range of deductible expenses available to you. Since the business is recognized as a separate legal entity, expenses strictly related to your LLC's operations, be it office rent, vehicle costs, or professional fees, can be deducted to offset income. This separation fosters clearer accounting practices and can lead to more aggressive but entirely legal tax strategies. The formal structure of an LLC serves as a framework within which to organize and optimize these deductions, turning business costs into effective shields against excessive taxation. Personal asset protection is another cornerstone of the LLC's appeal. By law, an LLC shields your personal finances from liabilities incurred by the business. This means that in the event of debts, lawsuits, or financial mishaps, your personal property or home savings and other assets are generally protected. This legal firewall offers peace of mind and empowers business owners to take calculated risks without jeopardizing their entire financial foundation. Beyond the financial and legal advantages, an LLC also enhances your business's credibility. Clients, suppliers, and partners often perceive LLCs as more established and trustworthy entities compared to informal business structures. This credibility can open doors to better contracts, partnerships, and even financing options, creating a virtuous cycle where professionalism fuels growth, which in turn reinforces your legitimacy in the marketplace. Taken together, these benefits illustrate why forming an LLC has become a popular and prudent choice for entrepreneurs and small business owners looking to optimize tax outcomes while protecting their personal and professional interests. The LLC is not just a tax toolkit, as a strategic vehicle through which you can build a resilient and respected business, setting the stage for long-term success in a competitive environment. Building on the strategic foundation of forming an LLC, it's important to explore the different structures within this flexible entity type, since your choice will have significant implications for how your business operates and how you're taxed. The LLC offers a variety of structural options designed to accommodate a broad range of business models, from solo entrepreneurs to partnerships and beyond. Each structure comes with nuances that influence decision-making, tax obligations, and management responsibilities. So understanding these distinctions is key to optimizing your business setup. The simplest form is the single-member LLC, which, as the name suggests, is owned by one individual. This structure provides a streamlined approach that combines the deep liability protection of an LLC with the simplicity of sole proprietorship taxation. By default, the IRS treats single-member LLCs as disregarded entities for tax purposes, meaning that profits and losses flow directly through to your personal tax return via Schedule C. This pass-through taxation avoids the double taxation seen in traditional corporations, while maintaining the benefits of legal separation between personal and business assets. For those running businesses with partners, the multi-member LLC structure becomes relevant. Here, ownership and decision-making are shared among two or more members, which allows for more capital, ideas, and responsibility pooling. Tax-wise, multi-member LLCs default to being treated as partnerships, filing Form 1065 annually, and issuing Schedule K-1 South 2 members to reflect each person's S share of the profits or losses. This structure promotes transparency and flexibility, but requires a higher degree of coordination and formal operating agreements to navigate responsibilities and distributions smoothly. One of the most advantageous aspects of LLCs is the choice of tax treatment they offer beyond these default structures. While the IRS provides standard pass-through taxation, LLC owners can elect to have their business taxed as an S corporation or a C corporation, depending on their unique circumstances. Opting for an S-corp election often allows owners to save on self-employment taxes by paying themselves a reasonable salary while treating remaining profits as distributions, which may be taxed at a lower rate. The C-corp election, while less common for small businesses, can be strategically employed when planning for reinvestment or attracting venture capital, as it separates corporate taxes and potential dividend taxation. Navigating these choices isn't always straightforward, though, as each comes with distinct regulatory requirements, tax implications, and paperwork. For instance, S-corp elections require you to file IRS Form 2553 and adhere to specific shareholder eligibility rules. While C-corps face corporate tax rates and different reporting obligations, choosing the right tax classification should align closely with your business goals, income level, and growth expectations, often benefiting from expert advice to avoid pitfalls or missed opportunities. Ultimately, these structural options highlight the remarkable adaptability of the LLC as a business form and taxation vehicle. By providing multiple pathways depending on size, ownership, and financial strategy, LLCs empower entrepreneurs to tailor their business model to their evolving needs, blending liability protection with tax efficiency in a uniquely customizable way. This adaptability is a core reason why LLCs have soared in popularity and remain a top choice for many today. As we navigate deeper into the world of LLCs, understanding the practical steps to form one is essential for turning this strategic concept into a tangible reality. Forming an LLC is not just a paperwork exercise. It's the formal act that sets your business on a structured path toward legal protection, tax benefits, and operational clarity. The process, while straightforward when approached systematically, involves key decisions and procedural requirements that can influence your future success and compliance. The first step in creating an LLC is choosing the state in which to register your business. Most entrepreneurs naturally select their home state, where they conduct the majority of their business, because it simplifies compliance with local regulations. However, some consider registering in states known for business-friendly laws such as Delaware, Nevada, or Wyoming. Each state varies in terms of fees, tax structures, and reporting demands. So this decision should be informed by your specific business model and growth plans. It's a foundational choice that can impact both your costs and operational flexibility. Next comes the task of naming your business. This step might seem purely creative, but it carries significant legal weight. Your LLC's name must be unique within the state of registration. Comply with naming conventions. It can typically include designators like LLC or Limited Liability Company to signal your business structure. The process usually entails checking the state's business name database to ensure availability and reserving the name if necessary. A well-chosen name not only meets legal criteria, but also reflects the identity and professionalism you want your business to project. Registering with the appropriate state authorities is the crucial third step. This involves filing the Articles of Organizations, sometimes called a Certificate of Formation, with the Secretary of State or equivalent office. This document formally establishes your LLC's existence and typically outlines your business name, registered agent information, and management structure. Filing fees vary by state, but expect this to be a necessary investment in unlocking your LLC's legal status. Some states also require additional documentation, such as operating agreements, which clarify member roles and business governance. Once your LLC is officially recognized, obtaining an employer identification number from the IRS is the next vital milestone. The EIN functions as your business's social security number for tax purposes, enabling you to open bank accounts, hire employees, and file tax returns. Applying for an EIN is simple, free, and can be done online through the IRS website, making it an accessible and essential step for establishing your business's financial autonomy and compliance. Finally, opening a dedicated business bank account solidifies separation between your personal and business finances, a crucial factor for maintaining the liability protection LLCs offer. A business bank account streamlines bookkeeping, simplifies tax preparation, and enhances your professionalism when dealing with clients and vendors. Many banks require your EIN and LLC formation documents to open an account, so timing this step after registration and obtaining your EIN is both logical and necessary. Each of these steps transforms the abstract benefits of an LLC into concrete legal and financial standing. Following this process with diligence and attention to detail ensures that your business foundation is robust, compliant, and primed for future growth. As we proceed, these practical considerations lay the groundwork for the more nuanced strategies that will help you optimize your LLC's performance and tax positioning, continuing our deep dive into establishing and managing your business effectively. One critical pillar that underpins both compliance and tax optimization is maintaining essential documentation. Whether you're just forming your LLC or have been operating for years, staying organized with your paperwork is a strategic habit that protects you, supports your tax deductions, and simplifies your financial management. At the heart of this organizational system are invoices. These documents record sales, transactions, services rendered, or products delivered, serving as proof of income and supporting your revenue claims on tax returns. Well-maintained invoices not only aid in verifying your income, but also help track payment timelines and customer relationships, which are vital for cash flow management. Equally important are receipts. Bank statements, complement these records by providing an official trail of cash flow in and out of your business accounts. Reconciling your bank statements with your invoices and receipts ensures accuracy in your accounting and helps detect discrepancies early. Additionally, statements serve as backups that corroborate your reported income and expenses. Vendor contracts are another key document category often overlooked, but crucial in establishing clear terms and protecting business relationships. Contracts outline payment terms, scope of work, deadlines, and responsibilities elements that protect you legally and financially. Keeping organized contracts supports proper expense categorization and can be invaluable in resolving disputes or negotiating terms. Finally, managing payroll and payment records meticulously is essential if you have employees or contractors. These records not only ensure compliance with tax withholding and labor laws, but also underpin deductions related to wages, benefits, and contractor payments. Proper payroll documentation avoids costly penalties and is critical when filing employment taxes. Together, these documentation categories form the backbone of smart business management. They reinforce the core principles we discussed earlier. Knowledge is profit. Planning is essential, and documentation protects you. By implementing a systematic approach, whether through digital tools, accounting software, or well-organized physical files, you reduce stress, avoid errors, and position your business for smooth audits and optimal tax outcomes. Building on the foundation of essential documentation, effectively managing and leveraging your financial records requires the right tools, software solutions designed to streamline bookkeeping, simplify tax filing, and give you control over your business finances. Choosing the right tools not only saves time but also ensures accuracy, helps you spot opportunities for deductions, and keeps you compliant with IRS requirements. QuickBooks stands as the industry standard for bookkeeping and accounting. It's widely trusted by small business owners, accountants, and tax professionals alike, because it offers robust features tailored to tracking income and expenses, invoicing clients, managing payroll, and generating detailed financial reports. QuickBooks integrates well with various banks and payment platforms, automating data entry and making reconciliations straightforward. Its detailed reports provide the insights needed to make savvy financial decisions and prepare for tax season with confidence. For the actual tax filing process, user-friendly platforms like TurboTax and H&R Block offer comprehensive, do-it-yourself solutions that guide you through your returns with easy-to-understand prompts and step-by-step instructions. These platforms are excellent for business owners who want to maintain control over their taxes while benefiting from built-in checks to reduce errors and optimize deductions. Many versions include features for small business owners that directly support LLCs, self-employed individuals, and freelancers. In addition to these, several other tax management and bookkeeping apps deserve mention, such as FreshBooks and Xero. FreshBooks is known for its intuitive interface and strong focus on invoicing and time tracking, ideal for service providers and freelancers who bill by the hour. Xero offers powerful cloud-based accounting with comprehensive features and a wide array of integrations, making it popular for businesses that value flexibility and real-time collaboration with accountants or team members. Using these tools effectively ties directly into the core principle we've emphasized throughout: organization is power. When your financial data is well managed and accessible, you can maximize deductions, monitor your cash flow, and make informed decisions for growth and tax efficiency. These platforms help automate many tedious tasks and reduce human error, freeing up your time to focus on what you do best, running your business. Picking up from our earlier discussion on the foundational steps for structuring and managing an LLC, it's clear that while solid paperwork and reliable tools are crucial, there's another dimension that separates the good from the truly strategic business owners: advanced tax planning. This next phase goes beyond compliance and organization, diving into how you can legally minimize tax liabilities by anticipating and maneuvering within the rules to safeguard more of your hard-earned income. It's in this zone that knowledge transforms into tangible financial advantage. Legal tax minimization is not about evasion or shortcuts. It's about understanding the multi-layered tax code and leveraging provisions that many overlook. Beyond retirement, healthcare-related accounts like health savings accounts and flexible spending accounts offer unique triple tax advantages that few small business owners capitalize on fully. An HSA paired with a high-deductible health plan allows contributions that reduce taxable income, plus tax-free growth and withdrawals for qualified medical expenses. A rare opportunity for tax efficiency married with practical health cost management. FSAs also allow pre-tax money to be set aside for medical or dependent care expenses, though with less flexibility, making them an important but slightly more rigid component of a savvy benefit strategy. Charitable giving also plays a sophisticated role in the tax minimization toolkit. While many know that charitable donations can be deducted, few use this intentionally as part of a strategic approach. Following IRS guidelines precisely is essential to unlock these deductions. But beyond that, tools like donor-advised funds introduce a layer of control and timing that can amplify both your philanthropic impact and your tax positioning. By donating assets upfront into a DAF, you secure an immediate tax deduction, yet retain the ability to recommend distributions to charities over time, aligning giving with cash flow and tax planning goals. Proactive tax planning isn't just about maximizing deductions, but also about managing how and when you pay taxes. Quarterly estimated tax payments are a critical discipline for LLC owners who want to avoid penalties and smooth out cash flow burdens during tax season. Similarly, understanding and leveraging Section 179 expensing can provide immediate tax relief by allowing the full deduction of qualifying equipment purchases in the year acquired, rather than over several years through depreciation. This accelerated expensing is especially beneficial for small to medium-sized businesses investing in growth. Finally, the deliberate strategy of deferring or accelerating income and expenses is a nuanced but powerful tool, depending on your projected tax bracket or anticipated earnings in coming years. Shifting revenue or deductible spending between tax years can substantially affect your overall tax liability. This maneuver demands both foresight and flexibility, but when deployed judiciously, can fine-tune your tax position to your advantage without violating any regulations, turning tax timing into a dynamic aspect of your financial playbook, building naturally on the advanced strategies we've explored. It's vital to anchor those ambitions in reality with some serious reminders that underscore the complexity and responsibility inherent in effective tax planning. While techniques like retirement account optimization and strategic income timing can yield impressive results, they also demand a foundation of professional guidance, discipline, and awareness. Without these anchors, even the best plans risk faltering under the weight of outdated knowledge or missed compliance requirements. First and foremost, consulting regularly with a CPA or tax attorney is paramount. These professionals bring both technical expertise and up-to-the-minute knowledge of the tax code's evolving landscape. The intricacies of federal and state tax laws, especially for LLCs, are nuanced and frequently in flux. A seasoned advisor can not only help you navigate deductions and credits, but also identify subtle planning opportunities or pitfalls that might go unnoticed. Far from being a one-time checklist item, professional consultation should be integrated into your financial rhythm, elevating your decisions from guesswork to strategic moves. Equally important is the discipline to maintain organized, up-to-date records. Advanced tax strategies lean heavily on accurate data. Without a reliable system tracking income, expenses, payroll, and charitable contributions, even the most sophisticated tax minimization tactics could unravel during an audit or tax review. This involves not just storing documents, but regularly reconciling bank statements, updating accounting ledgers, and ensuring your digital or physical filing systems are robust and easily accessible. Consistency here creates the groundwork that makes strategic moves possible and defensible. Moreover, staying current with federal and state tax law changes is a non-negotiable reality of business ownership. Tax legislation can shift based on political climates, economic policies, and regulatory reforms, sometimes in unexpected ways. What was a valuable deduction or advantageous rule one year may be limited or altered the next. This dynamic environment means that your tax planning cannot be static. It must adapt fluidly. Subscribing to updates from trusted sources, attending webinars, and maintaining your relationship with your tax professionals help ensure your strategies remain aligned with the rules governing your operations. Transparency and full compliance are the cornerstones of sustainable tax management. Skirting rules or pushing boundaries too far might seem tempting to reduce immediate tax burdens, but the risks, including audits, fines, reputational harm, and legal consequences, far outweigh the benefits. Building your tax plan on a foundation of honesty and openness not only protects your business, but fosters long-term stability. It signals to stakeholders and authorities alike that your business operates in good faith, which itself can be a source of competitive advantage. Taken all together, these reminders emphasize that advanced tax strategies are not isolated gambits, but part of a disciplined, ongoing cultivation of your business's financial health. They call for commitment, vigilance, and trusted partnerships that transform complexity into opportunity. The journey forward is as much about ethical stewardship and strategic foresight as it is about numbers and deductions, balance that ultimately defines sustainable success. As we transition from understanding the vital importance of ongoing compliance and professional guidance, it's time to focus on concrete, immediate action steps that can set your business on a proactive and empowered trajectory. This phase transforms the concepts and warnings we've discussed into tangible tasks actions that bridge the gap between intent and execution, ensuring that your business isn't just reactive, but strategically positioned for financial efficiency and growth. The very first and perhaps most critical step is to identify all deductible business expenses. This includes everything from office supplies and travel costs to software subscriptions and professional fees. Many entrepreneurs overlook small but cumulative expenses that, when properly documented, can substantially reduce taxable income. This meticulous categorization of costs doesn't just lighten tax burdens, it also refines your understanding of where your money goes, informing smarter budgeting and operational decisions throughout the year. Parallel to identifying expenses is the essential practice of setting up and maintaining proper documentation. Solid record-keeping isn't just a formality. It's the backbone of every deduction and credit claim you make. Proper documentation ensures you're audit-ready at any time and simplifies the tax filing process enormously. You haven't already. Invest in reliable accounting software or a professional bookkeeping service to keep track of invoices, receipts, contracts, and bank statements in an organized, accessible way. Digital solutions nowadays often integrate directly with tax software, streamlining the entire process. Next, it's prudent to research LLC setup costs and regulatory requirements specific to your state. Since each state varies significantly in fees, filing procedures, and compliance mandates. Understanding these nuances beforehand saves unexpected expenses and legal troubles down the road. Consider factors like annual report fees, franchise taxes, and registered agent requirements. Knowledge here gives you leverage. You may discover cost-saving opportunities or alternative entity structures more advantageous for your unique circumstances. Consulting with a tax professional who understands your specific industry is another indispensable step. Taxes aren't one-size-fits-all, and industry nuances from allowable deductions to typical revenue cycles can drastically impact your tax strategy. A specialist not only ensures you re-wearing the right shoes for your terrain, but often spotlights deductions and credits you might otherwise miss. Its personalized insight helps avoid costly mistakes and unlocks opportunities most generic tax advice leaves untapped. Finally, with these foundations in place, it's time to design your tax strategy for the year ahead. This doesn't mean setting a rigid plan, but rather outlining a flexible yet focused roadmap that aligns with your business goals, cash flow patterns, and tax obligations. Your strategy might include benchmarking quarterly tax payments, scheduling major purchases to benefit from accelerated depreciation, or setting optimal contribution levels to retirement and health savings accounts. The goal is to craft a plan that transforms tax season from a reactive scramble into a deliberate, manageable stage of your business cycle, continuing from the practical, immediate steps that anchor your business in solid financial ground. It's crucial to acknowledge the profound impact that well-executed legal tax strategies can have on your bottom line. Beyond simple cost-cutting, these strategies often translate into significant savings, as if reducing your effective tax rate by an impressive 15 to 30%. This level of saving can mean the difference between struggling to break even and reveling in newfound cash flow that fuels growth, innovation, or personal wealth building. But the benefits don't stop at dollars saved. Implementing thoughtful tax strategies also plays a pivotal role in asset protection and risk reduction. Structuring your business correctly, utilizing deductions smartly, and maintaining rigorous compliance protocols create a defensive shield around your resources. It's a way of safeguarding not just your money, but your reputation and long-term sustainability. The calmer sleep that follows comes from knowing your business is not exposed to unnecessary legal or financial vulnerabilities. Moreover, the very act of engaging in strategic tax planning elevates your business professionalism. When your financial house is in order, with clear records, timely filings, and proactive planning, you signal seriousness and reliability to partners, investors, lenders, and customers alike. This credibility can open doors to better financing terms, strategic partnerships, and even higher quality clients who trust your business acumen and stability. At its core, the combination of these financial and legal protections ultimately offers greater peace of mind. It removes the constant stress of wondering if you're remaking costly errors or missing out on tax-saving opportunities. Instead, you operate from a position of confidence, equipped with knowledge and expert advice, turning tax season from a dreaded deadline into a strategic milestone, a checkpoint that reinforces your control over your business's financial destiny. Naturally, the key to unlocking this trifecta of benefits tax savings, asset protection, and professionalism lies in dedicated effort and the right partnerships, strategic planning with knowledgeable advisors, ongoing education about evolving laws, and disciplined record-keeping form the bedrock of this advantage. This integrated approach empowers you to not only keep more of what you earn, but to direct those funds in ways that truly reflect your business goals and personal values. So as you reflect on the journey from setting up an LLC to mastering advanced tax strategies and compliance, remember this: the smart entrepreneur isn't just counting receipts. They are strategically cultivating their business ecosystem. With that mindset, you don't just survive tax season, you harness it. And in that harness lies the freedom to grow, innovate, and ultimately redefine what success means for your business and life. If there's one lesson to take away from today's video, it's this: true financial growth isn't just about making more it. It's about mastering the rules of the financial game and using them to your advantage. Just like Robert Kiyosaki teaches, legal tax strategies aren't reserved for experts or the ultra-wealthy. They're for anyone willing to learn, plan, and take bold action to protect and grow what they earn. I challenge you to reflect on what you're doing now and take just one step today to optimize your tax world, whether that's tracking your expenses better, consulting a professional, or rethinking your business structure. Your future self will thank you for it. This sparked new ideas or helped clarify your path? Let us know in the comments. Give us a thumbs up and subscribe for more real-life lessons from the world's best books. Check out our other videos to keep bringing the world's best ideas from books straight into your life and your wallet. Let's build smarter, freer futures together.